Hello, this is Dave Maddock with Maddock and Associates. Thank you for joining us for the 2015 Group Medical Insurance Update. Hope you all had a great Christmas and are looking forward to an exciting and happy New Year's. We are really glad that you could join us. There's quite a few people joining us today, as well as current clients and potential future clients. And what I'm doing too is recording this webinar, so I'm going to put this webinar up on our YouTube channel so that you can watch it later at any time. So moving ahead with the webinar here, what we're going to cover today is just a quick review of Maddock and Associates, who we are, who I am, Dave Maddock Jr., RHU. Then we're going to move into a political/legal update. Then talk about PPACA or Obamacare update and including some important compliance dates going forward. And then finally we're going to wrap up with some medical insurance trends. Medical insurance is always changing, it always will change, and so we're going to talk about some of the latest developments in our industry. So who is Maddock? Maddock and Associates, we're an employee benefits broker. We've been in business for now over 40 years, have about 500 small group clients, one of the largest independently owned brokers in Washington State, headquartered here in Tacoma. Dave Sr. started the company. I've been here about 13 years, Dave Jr. And we really take pride in working for small businesses, helping them make sure that they get the best value in medical insurance. The premiums continue to go up and up every year. It's just part of what's going on: taxes, medical inflation, medical new discoveries, utilization. There's a lot of different reasons for that. As a broker, we help our clients manage those increases, try to avoid them to the extent we can, and then also do a very thorough job shopping the market. So every year our clients get to see, hey, this is what's available. This is our renewal increase or decrease sometimes, and then we bring them all the other options available in the market. We're also very creative and kind of thinking outside of the box. A lot of times there's creative ways to set up benefits to help either the employer or employee save money or get more value out of the benefits. So being a local broker is unique, becoming more and more unique. There's been a lot of consolidation in our industry, and we think that's a good thing. We're able to stand apart. Our headquarters is right here. We're not back east, if you want to talk to an owner of the company, you know where to find us. So really excited about the future and all the new innovative solutions that are coming our way. So who I am, Dave Maddock. When you call and ask for Dave Maddock Jr., I've been working in employee benefits for 13 years. I've been very active in the industry. So I'm the past president of both the local Tacoma or South Sound Association Health Underwriters, as well as the whole state Washington Association Health Underwriters. And I still am on the Washington Association Health Underwriters board. So that's our industry association, and focus a lot on healthcare reform and both locally and nationally the politics involved with healthcare. So a lot of times through the association I'm meeting with legislators, senators as well, to help educate them on what the laws they're passing, how that would impact both the individual and small group insurance market in the state. And our main goal is to just really push for more options, more competitiveness, less taxes, trying to find enable more affordable healthcare options for both the individual consumers as well as the small group clients. And so that's what we do there. I'm also a member of the Washington Insurance Exchange Advisory Committee, and so that's a committee of 12 people that had to be appointed. I'm the insurance broker on the committee. There's also people that work at hospitals, large medical groups, insurance companies, and then even like healthcare advocacy groups. And so what we do in that committee is we work with the Washington Health Plan Finder, also known as the Exchange, and they keep us up to date on their latest challenges, and we give them feedback on ways to help improve the exchange and feedback on their ideas going forward. So those two positions really keep me up to speed and put me in a good position to disseminate this knowledge, both on what's happening now with healthcare reform, what's coming down in the future, and what you need to do to stay compliant and be competitive. I've got basically a degree in employee benefits, registered health underwriter. I also have some certifications in consumer-directed healthcare and a degree from University of Washington Business School. So getting into the political and legal update, politically, as you know, in November 2014, there was a big election, and the Republicans took over both the House. They had the House, but now they took over the Senate as well. So what that means is the Republicans going forward are now going to control the agenda and a lot of the budget in the government. That gives them a lot of control over what the agenda, what we're going to talk about, or what laws are going to be voted on, as well as what things are going to be funded. However, there's checks and balances, and President Obama is still the president for the next few years. And so with respect to health care reform, Obamacare, or PPACA we call it, the Patient Protection Affordable Care Act, we're not, legislatively, President Obama is committed to vetoing any major change to his legislation. So this law, for better or for worse, is thought of as his legacy. He's not going to okay it being overturned or majorly gutted. So even though the health Republicans are in control, and they may, some of them may say we're going to repeal the law, it's unlikely that the Republicans will be able to repeal the law. So legislatively, we're not anticipating any major changes to PPACA while President Obama is in office. I'm sure there'll be minor changes made to the law, which will need to be happen, but until there's a change in presidency, I won't see the legislatively a big change or or the law going away. One thing that could cause major change would be the judicial branch. So the Supreme Court is going to be ruling on the law again, and I just got an email, I guess March 5th of 2015 is when there's going to be oral arguments heard. And you'll be able to pull those up on the internet. And last time, well, you can hear all the oral arguments for the Supreme Court, but it's kind of like the Super Bowl of intellectual arguments and lawyers. I was very involved listening to the first time the PPAC was up against the Supreme Court, and it's just really fascinating to listen to the lawyers argue their cases. Very, these are some of the best lawyers in the world. Whether you like lawyers or not, it's pretty interesting. So you'll be able to listen to that. Usually they post it online on the Supreme Court blog, and then usually the decisions are handed out in June sometime. So sometime in June we'll get a decision, and it's a King versus Burwell case. And so essentially what this case is involved, the main question is, can somebody get a subsidy? And this is individual plans, not group plans, but can somebody that's individual go to healthcare.gov, the exchange, and get a subsidy from a federal insurance exchange? That's the question. It's well thought and agreed that the law specifically says no. To get a subsidy, you have to be getting it through a state-based insurance exchange, and that's been repeated by many of the people that have that were responsible for writing the law. So there's a lot of arguments saying that you cannot get a subsidy through a federal exchange. However, there are only about 14 pure state-based insurance exchanges. 27 exchanges are federally run, 7 are state-federal partnership, and 3 are federally supported marketplaces. I'm not going to go into the minutiae of what the differences between all those are, but essentially when this law was created, the idea was that each state has a different independent insurance marketplace, and each state would want to have control over exactly how their own exchange or marketplace would function. And they put it into the law saying that, and they really wanted the states to do that. The feds didn't want to have to get involved at that level. So in the law, they said that, to get a subsidy, they have to go get it from a state-based exchange. But when the law was actually getting implemented, I guess all but 14 states essentially said, we're not going to run our own insurance exchange. There's, from a political perspective, a lot of the Republican governors just said, we don't want to spend a dime of our state's money on this thing. We think it's a bogus law. We're not going to participate, essentially. And then there was some states that were, kind of like they wanted a partnership. They didn't really want to do it all on their own, and there's some combination in between there. But so essentially the feds had, to make the law not totally fail, they had to step up and come up with a solution. So they created this federal exchange where the feds created a default exchange for all the states that didn't do their own, and often went off and running. In that process, I don't know if they forgot or didn't think it mattered that the law said technically the federal exchanges couldn't do subsidies. So that's what's going to be decided in the Supreme Court ruling. And so if the law says, and the lawyers sometimes they can say, well, it was the intent for everyone to get an exchange, so the fact that it's state-based and we're doing federal-based exchanges doesn't really matter. So if they rule that way, saying that the federal tax credits are okay, then it's nothing happens, nothing changes. But if the law says, if the Supreme Court comes down and says no, the law specifically says it has to be through a state-based exchange, that would mean all of the exchanges, well, Washington has their own state-based exchange, so I guess Washington wouldn't have an issue, and the 14 others that did the state-based exchanges, but all the other 36 states would have a major problem. Basically, their exchanges would no longer be able to give out get out any subsidies. So anybody that had enrolled in those wanting subsidies would most likely disenroll, except for those very sick in the process of treatment. Obviously they'd figure out a way to get money to pay for their insurance, and but essentially those markets could fail. So it's a big high stakes consequence there. And then if 36 states failed, or there would legislatively they would have to do something very quick, or this at least the individual part of the insurance marketplace for 36 states would go into some sort of disarray. So very interesting. Be very interested to see how this ruling comes down and what happens afterwards. So stay tuned for that. Like I said, in June is usually when they come out with these rulings. So coming into the PPACA update, what we're first going to go over is some taxes, new taxes, and then reporting. So 2014, one of the new taxes is the PCORI fee. This is a patient-centered outcome research fee. Most groups, if you just have a regular insurance plan, you don't have a health reimbursement arrangement, or you're not self-insured, then the insurance company is taking care of this fee for you. There's nothing you have to do. Really, though, if you do have what's called a health reimbursement arrangement, and what that is, a lot of our clients nowadays are going with higher deductible plans, but then they're offering to subsidize part of the deductible for the employees that get sick or that need it. And to do that on a tax advantage basis, we usually set up what's called a health reimbursement arrangement, or HRA. And that HRA is treated as a separate little insurance plan, and that is subject to this $2 per member per year tax. Also, companies that are self-insured have to pay the PCORI fee on each $2 per member per year. So if you're self-insured and had a HRA, you'd have to pay the fee twice. Not many people do that. But anyway, this is a fee that would be paid once a year to the IRS using Form 720. It's due July 31st each year, and it expires in October 1st of 2019. As I mentioned, insurance companies generally pay the fee. It's just, they all do. It's just included, and this is buried in your premium somewhere, and they handle that. But if you're self-funded or using an HRE, you need to pay the fee. And how you pay the fee is this Form 720, and it's kind of an interesting form. It's a multi-use form. So, if you sell fishing tackle boxes, there is a special tax on that. Arrow shafts, bows, quivers, broadheads, and points. There's all these crazy taxes that show up on this form. You basically ignore all that part unless you're in those businesses, but it's Part 2, number 133. This would be where if you had HRA, it would be under or applicable self-insured plans. So HRA would be here. Under applicable self-insured plans, you put the average number of covered lives times the fee, which is $2 this year, and that would be the tax. So it's a simple form. You just got to remember to do it before the end of July. And if you're using our preferred HRA administrator, they will remind you to do the form and give you instructions on how to do that. And then Maddock and Associates, we're always here to help you with that form and answer all your questions.